Hi guys, and welcome back to another video. So I had a bit of a tough time this week. Here's the long-standing equity curve from 23rd of March to the beginning of the combine. So this is 3 months into the day, because today is the 23rd of June 2017, and there's where I passed the combine, obviously, and I'm up 80 on the FTP. So I've just been back and forth in a $250 range. Long term, this is fine. I can see there's probably like a double. Let's have a look. There's a double top there, or this might be slightly lower, and then this is slightly lower. So yeah, a bull flag hopefully, or whatever the case is going to be. But in terms of the integrity of the curve, it's good, and there's nothing wrong with that. I struggled this week because, not just because I took trades and they didn't work out, but because I actually didn't push. There's a big difference between the person who takes home gold and the person who doesn't even compete in the Olympics, much less take a medal, is a fraction of a hair of an inch. It's nothing really, and it's that little bit that was missing this week, just that little edge that was missing in terms of energy and desire to trade, that made all the difference. So I did actually make a little bit of money this week, sim money in the FTP. That was, the computer's taking a little bit of time, but I think it was about $30. In the meantime, I'll bring you over the NinjaTrader dashboard. Yeah, 28, 27, 11 trades. The thing that I do like about this, looking at the bright side, is I had 1, 2, 3, 4 wins out of 11 trades. That's a 36.4% win rate. So knocking on a 1 out of 3, very low by most people's standards, and yet I still managed to eke out a little 0.6R profit for the week. And also 4.35% expectancy is just shy of the casino's blackjack edge, if I remember correctly. Don't hold me to that, but I believe it's 5.26 is the casino's edge. So I'm happy to be the casino. It didn't turn out, it didn't make much. Number one is sim money, but even if it was real, it wouldn't have made much money. But as I always say, if you just move this decimal place over, so you're trading 10 contracts and that decimal place goes there, 282 in a week, 282.70 adds up. It's over $1,000 a month, even though you do need to leverage a big amount of contracts. But I'm not looking to be the superstar trader. I'm looking to be the consistent trader and slowly build size and stay in this for the long run. So having said that, obviously I know I can perform a lot better than this, as you've seen if you've been keeping track of my videos, but this is part and parcel of the trading puzzle. So what was the thing that happened to me this week? I'll give you an example. If we bring up today, I was well, let's look at the whole week. Just a second. Yeah, here's the week. So I had 3 winning days, but they were too small. Just couldn't get going psychologically, and then took a bit of a hit yesterday, but still within, kept it nice and contained. I was down 100 odd today as well, and I got an R back at the end, and so that left me up slightly. So you can see I approached 200 twice, not extra trade, like at the end of the trade. Within trades, I may very well have crossed over 200, because this chart shows the equity curve on closed trades, not intra-trade as well, as obviously as there's no way I know of to do that. So yeah, maximum drawdown within this this week is 227.22. I've also got a win streak calculator in there that I think I've mentioned before, and that shows on this main basic stats page. So chop, a bit of chop, but if you're looking at the chart as a chart and not thinking in terms of funded trader prep and combine and stuff. It's just a great looking chart. So it did affect me this week, and I was a bit hesitant to take trades, winning trades, losing trades. You know, this is what I did today to get back that R. So I just show you that on 6J. Here, this was completely avoidable, this first trade that I lost on, and then I got it back here. It did go an hour and a half in favor. My exits have been a little on the rough side this week. I could have got out at 26.5, but instead I eventually got out at 24.5. I'd have been really pissed if it came all the way back down here for the 10 o'clock close. I would have given back even more. But just to give you a flavor of what happened this week, the internet cut out right here as I would have taken along at 16, and then I would have done much the same as I've done here. Probably would have taken it off at 26.5 for 2.1R on this reversal candlestick here. Ultimately I was looking for 35, but that didn't happen, and my plan allows me to react to what's happening for good reward to risk ratio. So a bit of a choppy day in 6J. What else did I do today? I took a 6C trade here, and that just didn't work. Fair enough. And the big miss of the day was this short here from 232 here, which I would have probably taken off somewhere down here, probably at 215.5 ish or so, somewhere down there for over a 3R trade, like a 3.4R trade. But I hesitated on this one, and that's the story of the week. For my part of what went wrong was hesitation. Moved an order. I remember mentioning to a friend, a trader friend, I remember mentioning that I pulled an order on 6J yesterday that was down here at 10.5, 900 and whatever that is. Don't know how to pronounce that number. What's that? 10.5, not 910. 10.5, and I would have taken it off somewhere up here again. Like, my exits are okay, it's just the entries are giving me a little bit of a problem, in the sense that I either don't take them or I take them too soon. So perhaps a bit of FTP nerves, I don't know, or just a chop that's due. But the internet, as I said, disappeared right before here. Yesterday I was arguing with the significant other when this YM trade came here, long from 59, barely just missed this 95, 395 short here, literally by a few seconds. I had my order on here, got to within 2 ticks of the entry, and then boom, dropped off for whatever you want, really, 3-4R winners. For the mass favorable excursion was like 5, but I wouldn't have got that far. I would have got about 3 or so, 3.5, or somewhere down here. So lots of opportunity missed. I don't really want to delve into, dissect too much, because look, at the end of the day, an equity curve can't go straight up. It's going to go sideways, and the sideways movement is inevitably going to be a combination of method, just natural drawdown within a method, and trader as well. We're not robots, so we are going to feel a lack of confidence after a big run up, or a desire to protect gains, and so that's just naturally going to end up in a consolidation period, sideways period, or slightly down. The main thing is to stay afloat and not let this get out of hand, so that when things do go in your favor, you can take it's going to bring you to new equity highs. And I've said this before, if you allow things to get out of hand, then a good run will just bring you back to highs, or even worse, make a lower high before you get the next drawdown. So it's kind of deal with the short-term bad luck, take advantage of the short-term good luck, so that you have higher highs and higher lows. That's the essence, I think, in my opinion, of trading. And also, what did I want to say? There was one other point I wanted to say. Let me just pause the video. Yep, that point of capitulation. You know, I look at the I look over here and I look at this drawdown, $583.05. I think, well, I'm not going to do that again. I'm going to avoid that kind of drawdown. You can't. We can't avoid the drawdown. We have to live through it and not capitulate, not vomit at these lows. Because I remember what I was feeling down here. I was like, I'll change. I'll do the momentum reversal, order flow, yada yada yada. Anything to try to escape drawdown, to try to manufacture wins, when all we need to do is just live through it, not throw up, not capitulate here like the weak hands do, keep trading the method, and then you don't need a lot of these good runs to make a solid living from trading if you're trading size. And obviously if you're trading real money. So I'm behind in the sense that first I have to get funded, then I have to move on to one contract trading. But if I have the fortitude and the strength to continue doing this for a year, exactly what I'm doing, then a year from now I would be up. Let me just do a quick calculation. Yeah, based on just this curve alone, which obviously the expectancy dips as you consolidate, because it drastically lowers the expectancy. You know, this could change next week and or the week after, and I hope it will. But as things stand now, I've made just over $500 per month. And if we assume a $2,500 account per contract, so $2,500 per contract, that you got 1,000 for Ninja Traders, $500 margin, intraday margin. So you can have two contracts on at the same time in two separate instruments. You got 1,000 for that, and then 1,500 drawdown makes 2,500. Every 5 months, I would make 2,500. That means let's assume another 2 months to go live. Then the remaining 10 months would essentially mean that I could double my account twice in that period of time. So this time next year, give or take a month or two, I could be on 4 contracts at $500 per month, and that's $2,000 a month. Okay, it's not gonna pay bills in London or Tokyo, you know, it's not gonna pay for the family, but with time, pressure, and time, as Morgan Freeman says in The Shawshank Redemption, you can go places. And obviously, in the meantime, anyone who sees this kind of rock solid performance may knock on the door. You know, things will happen on the way to doing that kind of thing with the smaller amount of money. So that's my long-term view. That's my long-winded video for this week, seeing as I haven't put out much this week. I'm probably going to go off the radar again, because when I'm in this kind of phase, I like to just disappear and get on with the job. So I'll be back whenever it feels safe and right to do so for me. So in the meantime, enjoy your trading, trade your plan, and follow your rules, and I will see you all next time. Take care and have a nice weekend.